Your credit limit isn't random. Issuers size it like a risk budget. Let's break it down. Credit limits aren't a simple prize for a good score, and most rules you hear are backwards. A strong score helps, but two people with the same score can get very different limits because issuers also look at income, existing card lines, and how you've used credit over time. Your current limits absolutely count toward how much more a bank will extend. And limits aren't permanent. Issuers raise or cut them as your profile changes. Issuers set your limit by mixing credit bureau data with what they learn about your capacity and behavior. Your reports show your existing accounts, balances, and any late payments, and high utilization using a big chunk of your line can signal you need a smaller line, not a bigger one. Income matters because it anchors ability to repay, even if you have a great score. Banks also lean on their relationship data, then start with a test limit and adjust fast if delinquencies appear. Think of your credit limit as the smallest number allowed by several separate caps, and the tightest one wins. One cap is ability to pay. Your income and obligations can limit the maximum line. Another is total revolving exposure, meaning how much credit you already have across cards, including with that same issuer. Utilization can clamp down further if your balances run high. Even APR can reflect risk, and higher perceived risk often means a smaller risk budget for your line. Limits move over time based on what your account and your credit reports say at decision points. Many issuers run periodic reviews and grant auto increases, and asking for an increase is usually not the same as reapplying for a new card. Updating income can help because it lifts your ability to pay ceiling, but high utilization can trigger cuts, and a single late payment can shrink your options for months. Most crucial, the balance on your statement date is what gets reported. If you want a higher limit, your job is to look low risk on paper while proving you can handle more credit. Start with autopay for at least the minimum so you never miss a due date. Then pay early, before the statement closes, so reported utilization stays low, ideally under 30 and even better under 10. Keep your income updated, then request a limit increase at the right time. Before you ask, confirm whether it's a hard or soft inquiry, and don't immediately max the new line. The balance that reports is usually your statement balance, so paying before the statement closes can protect your utilization. CreditCardAgent matches you to cards based on how you actually spend and shows the real annual dollar impact versus your current card. Free, about 3 minutes, no credit check. Links in the description.